models, right? Um, and for context as well, like if you want to be super lazy with this stuff, go to the market maker screener results, and like this is like a gold mine for literally just giving you click sell, click buy on a bunch of stocks, which I guess is like what everyone kind of wants without having to do the work. So I've done that work for you guys. Or just break it down, right? So like this is running off of like market maker positioning, but based on the participant side. So what I mean by that is if you buy a call, a market maker is trading with you, not against you, except when positioning is overstretched. So what do I mean by that? It's basically when I take it as a concept, um, you you buy a call, and the market maker then has to buy alongside you to hedge the call that they've sold you, right? Um, they also then need to hedge with respect to all of the other derivatives. So just buying shares or futures is just them hedging one delta to the sold call position, which is negative one delta, right? Um, for them to then hedge like the rest of the positions, like they might then also be short gamma, they would also be positive theta, because obviously like they're making money as the option expires. That then also decays the delta, so as like time goes on and the option is like still not in the money and things haven't changed, they then need to like hedge less and less, so that positive delta that they were like hedged by is much lower. So let's say it was like zero point 0.3 delta, that's 30 deltas. As time goes on, let's say like the rate of decay is like, for simplistic terms, like zero point 0.1, right? You're losing 10 deltas each day. They then need to like hedge 20 deltas, so they like sell 10 of that initial like buy, right? Make make sense just from like the data side. Yeah,
Yep.
yeah. And then like with the charm aspect, they would have to hedge with respect to that. Gamma, they'd have to hedge with respect to that. Varna, they'd have to hedge with respect to that, and Vega as well. But you can't hedge those Greeks by buying the underlying. You've got to go and buy another option. So they might go and buy a call way out of the money, super short dated because they're very cheap, and then they'll have an algo that like usually like a binary search algo that will pretty much like pick off the right option for them to go and buy and hedge their book to like make them neutral across their positions. But you don't need to worry about that. That's like super complex stuff. The simple thing is when you get to a point where you've bought calls, but then everyone else has also bought calls, same strike, like 1,000, right? When I look at that, and I'm gonna flip back to market maker screening because this like helps you understand this, so you have a bit more confidence in it. And I'm gonna go to the intraday gamma section as an example. All right, so you've got all the levels that are like have appeared during this time period on the right, but then at the top you have all of the strikes sorted by actual like strike. So like the one that's closest, the one that's lowest rather on the positive strike is going to appear on the left. It's not sorted by size. So 4153, 4163, 4173, 183, 214, 314, so on, right? Um, Now, when I look at this, I'm seeing, okay, like there's 85 mil at 4153, 336 at 4163, 79, so on. Like if I'm looking at these levels, like when everyone gets to like 4163 on ES, there's a lot of people that are long here, like notably more versus like everything else, right? And then to get to 4173, I've got a smaller amount. So what that is kind of like saying from like a logic standpoint, I get to here, you have calls here, I have calls here, everyone else in Vexy has calls here, and then there's a bunch of newcomers that are trying to buy calls at this point as well. But you've got two options. You can sell, or you can roll out to a further strike at a further date. You can buy the same strike, further date, or do nothing. If you do nothing and price goes against you, you lose money. If it keeps going up, you're making more. If you choose to sell, which is the main thing that a lot of people probably do consider, and then they maybe reconsider a position later, then what's happening is like the net deltas that market makers are long by at this position are now going to short. They're going to sell everything that they bought relative to this position, right? Now, everyone who's here is losing money now because they're shorting, especially if the price starts to draw down. And obviously they need to hedge with respect to this 4173, but when they're getting when they're like when they're at this position, if the amount of sell, like the amount of calls being sold here is much larger than the amount that's being bought here, or here, or here, or here, then naturally that gives like a net sell effect. That net sell effect is usually large enough to cause a sell. And when that happens, you'll then go, like when you see numbers like this, you're expecting this to be like major resistance. And like as a standard like port of call, anything above 300 mil, especially when you get into like 400 mil up, I like consider them like a wall of China type thing. Like that, it's not going to be broken. So when you're looking to like place your position, you could put a limit order here, or like an even better example was this morning, or Friday morning. 4214 over here was at 159 mil. Actually, no, it got larger faster at that same point. Where was it? So if that's the same 4214 position. That was, wait, no, hang on. 26th. Let me find it. It was in here somewhere. Just bear with me a sec. Right, yeah, here we go. So this same 4214 position reached like 600 mil. This is at the open, like this is EST time. When we got to 4214 on ES, this is like a Jackson Hole day as well. So like naturally there is room for like other people like being completely offside at this, not necessarily offside at this position because they're long it, but from like a standard day perspective, if we get to this position at 4214 and it's that large, like you can expect that not to break. So you place your limit order. If you go back and look at price at that exact same time, 4214 basically rejected. We had like a 2.5 point MAE, so 2.5 point drawdown, and then you literally like banked, at least within the first 20 minutes, because I traded that myself, you hit 4194 from 4214. It's like a 20 point win. And if you like were heavy on the position, like 10, 20, 50, even like 50 contracts, like you're basically done for the day. There's no need to really trade more. I mean, depending on like how big your port is.
But you would not expect that kind of a reaction of 100 points when you see something like that. What sort of reaction would you expect when you see, say, 4 to 100 million plus?
So usually you expect at least 20 points, at least.
Okay.
And then there's a range of beyond that, of up to, like on average, I've seen Like at a median point, I've seen 20. At an average, I've seen about 37 points.
Okay.
So, like that's about what 30% of that move. Of course, like obviously, like the narrative that was like drawn out from that day, especially like given the way the Fed funds like future rate was being viewed, like heading into 23, where there was like an expected pivot, right? That completely changed. So then naturally, obviously, that like played a much larger impact as well. Um, but yeah, like you can expect a solid like rejection from a price point
And
like
what
that.
would you say is the average? In this case, it was only a couple of points. What's the average MAE on stuff like that?
So like a max MAE, and this is where like I leave a stop, is about 6 to 7 points. If it goes
That's
beyond
pretty
that,
good.
yeah, then I'm really like not looking to take that position. Like it's gonna blow out, and it happened before. So uh, I want to say it was 4163. Yeah, 4163 the day before. That was also another major strike. I saw that and I was like, okay, I'm shorting this. We got there and it just blew past it. We like went to like 4170, 4171, and it just mooned, right? Like at that point,
Yeah.
like I knew the level was void. There's just no point trying to like look at this. And it also lined up with the timing. So if you looked at August 25th, like when this started to like roll down and get towards like the 200 level, that's basically like when it like took off.
So when it breaks in that situation where it's going beyond 6 or 7 points, in your experience, does it sort of collapse back down in the original direction, or does it keep on going much
Usually,
higher? Like
yeah,
if
it
it
usually
breaks,
just keeps going. Yeah, it usually keeps going. And a way
so
to gauge that,
do you sort of trade that? Do you switch your position then and just ride it?
yeah, yeah, I'll try and ride it, especially if we retrace down to the 4163, because like naturally there's then also going to be a lot of sellers that are stuck at that point, and then that then also becomes like a psychological point of support, right? So like one other thing that I use is this. So like here, as an example, going into the 25th, you had like a slight drawdown, like there wasn't like a major drawdown from that position, so that was kind of like telling me, okay, people aren't actually like trying to load puts. Um, they're not intensifying on their sell, like they're not expecting sell to happen, so I'm not really like getting more conviction in that short either.
Okay.
Whereas here, this was the opposite, right? That snap back up literally like mimics the positioning from like a market maker perspective. So we had that huge snap down, 4193, then drew all the way back up to about 4200, 420 something, went peaked again and then just drew down like massively, and it just lined up perfectly with how positioning just kept going.
So in that case where let's say a level works
Yeah,
and you got that spike down and then prices coming back to the level, the strategy still stands, right?
yeah,
You
yeah,
can double dip.
yeah, yeah. Basically, yeah. You can go back in again. Um, and you can use like the levels to kind of just have more confidence in it. So, what was I in the bottom room? Hopefully, it like stayed where I was at. Yeah. So the same thing happened again, pushed right back up, and it was right at the peak again. So when it's there, like I'm not looking at this and thinking, yeah, I'm gonna try and long this now and get above it. There's just no point.
Got it.
Um,
And this is
yeah.
sorry, go ahead.
No, no, no. Go ahead.
So this is intraday only. And how often, during the course of a month, would you have this sort of wall of China? I like that name. uh, how
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 likely is
often
it to
does
like
that?
stay? Yeah, so this is where it gets really interesting. So like you want to like take a longer position, then you look at gamma results. I post these every day. If you can't be bothered to like scroll through, you can just type the command and it will give give you the results like the gex. So I don't track every stock because I've had to like build out the historical myself. But um, here we go. All right, so here's an example. Right, this is basically the top. We hit 4314 on ES. When you see positioning like super like overstretched relative to this year, because like this year is all that matters. I don't care about last year or the year before. It's not relevant to this market regime. So all I care about is this year and how this year is panning out. Um, and you can see it's like happened time and time again. So here, topped out. Here, topped out. Here, topped out. Here, topped out, topped out. Like,
Are you moving your mouse because I'm not seeing it.
oh right, okay. Can you see it now? No?
No.
Alright, okay, one sec. Let me stop showing my screen and see if it'll... Alright, can you see my mouse now? No? Okay, so I'll just say the dates. So like you can see
Okay.
uh August, was it August the 21st? The most recent peak where we hit
Yes, that
around
was.
2 billion.
Yeah.
That was the peak. We haven't looked back since at 4314. Incidentally, as well, 4314 was actually also another major peak in terms of net positioning. That hit 500, 600 mil. In fact, at
Okay.
one point it was 1 billion. Um, which, for context, like you can look at historical, you're basically talking like 25% of net historical positioning in one strike. It's just like not it's not gonna happen. Like, if we break it, it's gonna require like some major black swan or white swan event in that case. Uh, and then the same thing, like here. So relative to history, this was like so I'm talking like between May and July. Do you see that peak?
May and July, yes,
Yeah,
but
that peak.
it's slightly.
Yeah, slight peak, but comparison to like the last. So ignore everything beyond because obviously that's new data. But prior to that, the last peaks that we had were only slightly higher. So you had one between like March and May, around April period, and then prior to that you had one in Feb and early March, right? So that was like the fourth largest peak relative to history. Like taking a short there didn't seem like a bad idea based on
So,
overall
what about the
positioning.
one in August where you get um, probably the second highest peak of the year,
Yeah,
and the market just still continued?
yeah. So like if you looked at the timing of that, you still had like we hit 400, and then you still had at least 100 point sell. If you go to that
And,
same
and
time point on like your chart, you'll see the same thing.
I'm not sure what you just said. I'm talking about your gamma positioning that peak in beginning of August.
Yeah, 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 yeah. So like if you looked at, so I'm just gonna scroll over. I'm not sharing it on that screen, but let's let's bring it up. So we had a peak at the beginning of August. Was it 100 point sell? So we were at 4140. We chopped a bit. We drew down. It wasn't 100 points. 52 points from there. That same peak.
Oh, okay, I see. You know what? I was not aligning it properly.
Yeah,
Okay, there was a drop,
yeah,
and when it dropped, and the peak also dropped.
yeah. The peak
Okay,
dropped.
okay.
So like following like typical rules.
Actually, oh, you know
Yeah.
what? I just realized something. Um, so the peak dropped, but then when price went high, the positioning did not then go. Does that give you sort of more confidence that the move would continue?
Yeah. So like if I see so like this like the best example of this was like between May and July. Like basically early June. Positioning peaked, price was like choppy, but positioning really started to draw down, and it drew down like in spite of price picking up down to like minus 2 billion. Do you see that?
Yep.
That that was like a major indicator for us to be like, okay, yeah, like people aren't positioning because the option market is forward looking, whereas everything else is like backward looking. You just don't know. Um, so like looking at that, I was like, okay, yeah, this is a sell, and like we caught that sell as well.
No, no, I'm talking about when the market rose from that point onwards.
Yeah, so like in the inverse, like if you looked at that that point there, like okay, we had I think that was probably like around a weekend. I want to say that's around a weekend. At that point, like the positioning itself didn't look too aggressive. Like we had the drawdown, and most of it was from that peak. That then like land, you can basically see like where the point kind of stopped. You had like a bit of a drawdown, um, but wasn't that aggressive. So like when I was looking at this, I was like, yeah, this is kind of like off on the fence. I'm not looking for like a major drawdown here. I'm not getting confirmation on it. Like you're not drawing down by a billion. Like there's only a couple of hundred
Yeah.
mil drawdown there.
So in catching the so so when the positioning is peaks like that,
Yeah,
you're expecting price to fall.
yeah,
Is that correct?
yeah,
And
yeah,
then when the positioning and I'm assuming this is all relative. And
yeah.
when is it where you feel the market would rally?
So the opposite applies. Like if you look at end of March, we had the same thing there. Major negative positioning we'd never seen before. When that happened, we absolutely like ripped. We moved like 300 to 400 points.
Yeah. So uh, positioning being negative is not a sign that the market would go up. It has to get extreme. So the
Yeah.
extreme levels seem to be uh, above your 400 million, uh, and then below what then?
Below two, minus 2 billion, usually.
Minus 2 billion.
Yeah.
Okay. So if you're stuck at minus 2 billion, no, if let's say between 1 to 2 billion or 1.5 to 2 billion, is that predictive of anything?
Not necessarily. Like I would just follow trend at that point. So like if price
Okay.
is going down, I would just follow trend at that point.
So I see in May it was -2. So -2 seems to be generally it bounces back up, but not necessarily. Okay,
Yeah.
gotta gotta study this a bit more.
And then this is just one part, right? Like this is total spy. But like what also like we pay attention to is like sectors. So if you look at sectors, right? This is what was happening on big tech at the same time point. So when big tech is like overdrawn massively in total positioning and you're getting the same on SPY, I'm not looking to short further at that point. It just makes no sense because, like, we know how much concentration big tech has in terms of like the indices, like overall weighting, right? Let me just mute that person, whoever's in. Yeah, they've left now anyway. When you look at that total positioning, that drew down to a major peak relative to like that new period that we were focusing on. I was like, okay, well, we're minus zero point 0.5 billion on big tech. Makes no sense to be short. And then we had a rally.
Okay.
And then the same thing again with like the peak. This also peaked. Even recently, Apple peaked, the rest of big tech peaked. Yeah, the same thing again. This marked the top. This is also like when we started chopping.
Do you use this for just basically trades for the day, for the next like day or two, or can you extrapolate this to 1 to 2 weeks?
Yeah, you can definitely extrapolate it for like 1 to 2 weeks. So the market maker screener model runs off of like data like this, but also includes the other Greeks and so on. And if you look at these, like these have a positive 5-day expected return. So like you probably don't need to even hold those positions for 2 weeks. Like more often than not, I'm kind of expecting them to be done and out prior to that period. And if I don't need to hold it like for that long, then why should I, right?
Okay. So this is the market maker screen. What else should I be, reviewing?
So like yeah, just basically like tailing off. So we've gone through the Gex model. It applies for like all the other stocks, same thing. And then the sector model is the same concept as well. With this, you literally just have a list of stocks based on market maker positioning. So it's unique in that sense. Don't think anyone else like offers this. Um, we're looking at positioning for each stock, and then based off of that, we're taking positions. So, like selling of Apple, we were down like -3, nearly 4%. All of these other stocks have also had like negative returns. Prior to that, we had similar, like just before this like bump up again, high growth, high beta. There were buys on all of these names. They had positive expected returns despite the indices moving down. So it just gives you an idea of like how it works. Cool.
Yeah, I didn't quite get that. Maybe I'll review the data myself, and then maybe we could have follow on. This seems a bit overwhelming at first.
Yeah, no, that's fine. But it's like
Yeah.
it's super simple in the sense of like you have a sell list and you have a buy list. You can obviously like have your own method of reviewing those positions yourself to like validate it for yourself. Like maybe use volume profiles, something like that. But from a like overall like just doing the work for you, this is just giving you a list that is expecting on a 5-day expected like period. 5-day period is expecting a positive expected value.
Okay. I'll review this and look back historically as well.
Yeah. Um, and then like you've got futures entries. So like this is where like the bot will post signals. Um, for like
So
bot
when the bot
performance.
post signals, it doesn't put the entry, just gives the target, right?
Yeah, so the entry will come at the particular like time point, so you get like an idea. It will like at everyone as well, so you'll get a notification on your Discord to tell you
Okay.
when it's going through.
And what sort of stops do you
So
use?
five 5 to 8 points on ES, and then on
Okay.
NQ it's 15 to 25.
Okay. And I see you're generally targeting like 20 points, right?
Yeah, there's been points like in the past. There's been points where it's like targeted like I think uh, something stupid like 100 to 50 points, and it's landed.
Okay.
Um,
That's when the bot is dancing.
yeah, yeah. So like, yeah, there's been some crazy like trades that have like come out of this. Um, so yeah. Um,
So,
yeah. Then
so you,
there's intraday gamma as well. This is less relevant now because before I released this, you didn't have historical. So what I was doing was I was posting the PG command. So commands are all here. Um, where is it? Yeah, you can see it here. It's like these. You get this for like every stock. Certain stocks won't be available, but like the majority are. It's cleaner than this now, so you can actually like see it better. So if you like hop to bot room and you were to type like the same command, like you can see the positioning like with the actual like strike numbers as well. And this is basically what I was talking about. Like the way I see it is like when we get towards like a certain position and we're like trying to get lower, like 400 for me is going to be a difficult like place to crack because of the positioning below it. Now, if these like increase and they're larger, it sort of like acts as like a hop because the net sell effect is in place on the put side. Like you would have anything that's being sold here is being replaced because as price is getting closer to here, the positioning at like 390, say this was larger, is going to increase as well because gamma increases the closer it gets to the money, right?
mhm.
It's like a bell curve. So then market makers are then net selling more and more.
Yeah.
Um, so yeah, and then you also get like a view of like volume and open interest for each strike, unique to us again. You also get Vanna and Charm, and like for like a simple if else, like it explains like how to view those. There's also skew, which is, in my opinion, like one of the best commands that I've built. So it's different to like the standard skew metric that people are used to. Like I've run a slightly different calc, but basically like positive is bearish, negative is bullish. That's what you're looking for. You're looking for plus 50, minus 50. Get those reads and like it should inform your bias. You then also have like a daily, weekly, and monthly expected move provided to you on like a tenor basis. So it gives you an idea of like where volatility is likely to increase and when it's likely to dampen down.
If it dampens down, do you ever become a premium seller?
So I yeah, you you would want to, but then also you want to like get the most bang out of your buck. You want to take the trade that has the highest skew. So in this case, I want to sell calls here at this point.
When it is above 50?
Yeah. And when it's below 50, I want to sell puts.
So Tesla never goes below 50?
This was just on like this particular date. So
No, you have from July all the way to August.
yeah, but this is changing all the time, right? IV is demand dependent. So this will change
Okay.
all the time. Like this will, it shouldn't even say IV there. It should say skew, but I'll change that. So like if I did this now, it's completely changed, right?
Yeah.
And this is telling you like the option market is expecting around a 6% move. You can subtract from that because option markets always bake in additional premium from a risk perspective.
So could you use this all the skews and basically try to be a market maker and uh, sort of have a condor strategy on a weekly basis?
Yeah, in theory, yeah. So like that's also like something we're working on, like just providing strats based on our data to then allow people to just have like an automated premium selling strat, uh, buy buy strat and so on.
Yeah, you have to watch your size there though.
Yeah, yeah, definitely.
uh,
Um, but like then there's also a bunch of guys who are like really into their options trades. Um, and they play a lot of uh, these strats themselves. Like Defox is like one guy like likes playing like these really not necessarily like super intricate, but plays option strats like, all the time, like based on a lot of this data as well. So you've got that all in here too, and then like feel
okay.
free to like post your own in here as well.
So it's the market maker, intraday gamma, and then the Gex is in the market maker.
Yeah, so all of the data that we have market maker wise is pushed into a model, and then the model gives buys and sells based on it. And then I'm also working on providing like a this is the expected return for each stock based on it appearing in sell, buy, so on.
Okay, so which channel had the SPY and sector positioning?
Gamma results.
Gamma results. Okay,
Yeah.
okay, got it.
So like I do this alongside like my normal job. Hopefully eventually this just becomes like the full-time gig and I just trade full-time. Um, but I also do like morning prep, pre-market, UK time of like between 12:30 to 1:30. So that's like 1 hour before pre-market, 2 hours before market opens, sorry. And you have sectors like big tech, China tech, semis, cybersecurity.
And you do this every day?
Yeah, pretty much every day except some days when I'm in the office. You have it for memes, biotech, autos, travel, miners, high growth, high beta, banks, industrials, consumer staples, EVs, energy, crypto, cyber, as I mentioned before, and then yeah, we basically have all sectors covered.
So I saw a chart of a long short. If you want to be uh, in terms of dollar amounts equally weighted short and long, is there data that can be used for such a strategy?
Right, so like you want to pair a trade on like different sectors or just like what one indices or
Yeah, either different stocks or different sectors. But I want to enter in the morning and I want to exit, at the close and not have overnight, like basically intraday pair trading.
right. Yeah, no, nothing like that at the moment, but that's sort of like forming the next I'd say like evolution of the platform. Like we've really only properly kicked off since April, but where we're trying to go is like allow people to use the data that we have to create strategies or well, I mean more from like our own perspective as well, just provide strategies. But then that also
Hmm.
kind of like leads into like our next evolution, which is like this forms the basis of a fund, pretty much.
Very good. I wish you tremendous success.
I think yeah, fingers crossed. But I mean, like the data's proving its point so far. So from like a performance perspective, this is Vi's performance on ES from a short and long perspective.
Yeah, actually, I saw two charts. I saw this one, and then I saw another one you had where uh, for a month there was a drawdown. It was a
Yep,
shorter time.
yep, yeah.
Is
And
that
you can
is
see,
this the same
yeah,
chart?
yeah. So this is the same chart, just like longer time period. So you can see where the drawdown like basically like kicked off, like cumulatively around here. It's like long we had a drawdown, short we didn't have as much of a drawdown. That was the drawdown period. Then it picked right back up again.
What do you keep a track of how many losing trades in a row?
Yeah, so I think like the max number of losing trades we've had in a row was 11. 11, yeah, 11 losing trades.
Okay, and in winning trades.
Winning trades, the longest streak we've had is 35.
Oh wow!
Yeah.
And how many trades does this represent?
This is 6,526 trades.
Oh my gosh!
Yeah.
But I don't see that much frequency in the channel. In a this is wait a second. This is
So this
in a
is,
year.
yeah, so the bot trades on its own, and I won't post trades that are like too quick to land. So like the average, this is like fairly quick trades, like from like a mean perspective. The the trade time frame is 9.2 minutes
Okay.
on the short side, and then 8.5 on the long side on average. And then obviously there's periods where it's like a much more protracted, like longer trade. Um, but like there's loads of like much smaller, faster trades that happen in between.
Okay. So then which ones do you post?
The ones with more
The
conviction, like the longer
okay.
drawn out trades.
And do you have a chart of performance for that?
I can get those out, yeah, yeah. So they're like the higher conviction trades with like
Okay.
the longer horizons. Like Friday as an example, that was one short signal, had like an initial target, but then it stayed short. It will tell you if it's gone neutral or if it's reversing, like with another signal or not.
Okay. And the that bot. How old has that bot been posting?
The bot's been posting basically since May. I want to say May, June.
Okay.
Yeah.
This incredible stuff.
Yeah, it's doing okay. I'm always skeptical, so like I'm constantly like reviewing things, but yeah, like the data is the key part. Like I don't want people to rely on the bot just on its own. Like it does the job, but I also want people to become self-sufficient. Like I want them to be able to like use data on their own, and like that's kind of like how I
Yeah.
built the platform. So like I can back everything up with a data point to like say this is when this happens, this is the result on a historical basis, and so on. Um, that's like kind of how it works. Another like command is also like the high yield command. Oh, and the vola models as well. This one's like fairly simple. Like major extensions. This is a sell, and a major drawdown is a buy. You have two time frames of the 30-minute and the 7-minute. So the shorter term and the longer term, when they align together, then you have like a much higher conviction trade on the sell or the long side. And then you've also got Pluto and Jupiter, which are pretty simple. There's also a YouTube video going in more depth for those, so I won't go into those. Um, but buys on the gold line, sells on the dark violet line.
So this is bot command is something that's separate, and you're saying there's a YouTube video for that.
For Pluto and Jupiter, yeah. All the bot
Okay.
commands are like in here, so like you know which commands are what.
Okay.
Like high yield command here for SPY and for Qs. But this isn't just looking at high yield. This is a rate of change on a particular look back period, which I've identified as like a strong indicator for when positioning is gonna reverse.
Okay. And where's the link for the YouTube video?
It is in education links. So
Okay, got it.
Vexly University is kicking off. I'll be posting like this video as well.
I
Um,
like that. Vexly University.
yeah, yeah,
Okay. So, a lot of homework for me today.
yeah,
I want to go through all of this, and I'd like to sort of reach back out to you when I've sort of gone, to absorb this.
yeah. No, no worries. We do like onboarding sessions, as well. It's supposed to be like every Wednesday, so hopefully I'll keep them going, and they'll be like on an evening like post market to like run through all this stuff.
So you're
Um,
gonna have one this Wednesday?
yeah,
Okay,
ideally,
great.
yeah, yeah. But I mean, like to abstract that all away because that becomes like kind of time intensive.
Yeah.
I'm also like working on just posting all these videos up to the YouTube channel, and this one's going to go up today, so you can like revisit it if you need to, and then I'll also like break down just each command one by one and like how to use it.
Okay.
Yeah.
Excellent. Again, thank you, and look forward to using your service.
Yeah, and let's hopefully make you a bunch of money.
Yes, and again, it's great on you to start out this venture. Again, best of success.
Thanks, man. Cool. All right. Yeah, I've got to hop off, but just quickly as well. There's also like the news feed. So there's like this all posted here, and then the China news is also posted here as well. So, I mean, if you've got like multiple screens, you can pretty much just like leave them on in the
Okay,
background.
sounds good.
Cool. All right.
Have a
Cheers.
great day.
You too. Take care. Bye.
Bye.